We are back with our latest market review where we analyze the data to see if we're at risk of a market crash or correction. You know at Fallible, we always got our eyes on the downside. We are obsessed with risk management in a market where everyone is just completely drunk on the idea that stocks only go up. And they've completely thrown all risk control out the window. Not us though, we're gonna keep our eye on that downside so we can help you protect your money. So in this video, first we are gonna go over what's happening in Bitcoin because there are some real important lessons there. Then we'll move to stocks, of course, and we'll see if there's any downside here that we need to be actually worried about. And we also have a particular stock for you that should really benefit from a large trend that's just starting. So you'll definitely want to add that to your watch list. And then we'll jump into a key thing that you need to be doing, especially in a market like this, to both increase your profits and, of course, protect that downside. So let's jump into it. And of course, you know we got to use the research from our research firm Macro Ops. Best research around. So what is happening to Bitcoin? You know you hear people talking about it all the time again. Not as bad as 2017, where you couldn't get into an Uber without your driver talking your ear off about it. But you know the thing pretty much doubled from 20 to 40K. But we saw this thing pretty much double from 20 to 40K real quick. And it is hot again. But you can already see from this chart, we're having a nice little crash right now in Bitcoin. And that's why I said there's a lesson that we're learned from here that we could apply to stocks. But let's get into it a little deeper. You can see right here, when you compare the rise in Bitcoin to every other big bull market in recent history, going back to the 70s, Bitcoin just way outpaces everything. Nothing comes close. One of the greatest trends of our lifetime for sure. Now, when you see a trend like that, you want to call a top, right? You see something like this, it doubles in a month and you want to call a top. That's just what happens. But calling a top is always tough. So you can see right here with this chart that in the near term, Bitcoin is very far extended from its 200-day moving average. And that's this chart down here, where the green is showing you how far extended it is past that 200-day. And the reason we're talking about a 200-day moving average is because it's just a form of standard deviation. That's what you're kind of looking at. You're trying to see how far is a particular asset stretched from its average. Because normally what happens in markets when something gets really stretched, it will return back to its mean. Mean reversion, that's one of the base first principles of markets. So there's really two ways that prices move. They trend and then they mean revert. And depending on what time frame you're looking at, you could have a trending market with mean reversion in between, or you could have a giant mean reversion when you really zoom out, but then obviously each part of that is a trend. So if you really break it down to first principles, mean reversion and trend. There, first lesson. I said there would be some lessons. So looking at this, you can say it's very overbought because it's so far away from the 200-day. But here's the thing about something being overbought. It can go from overbought to really, really overbought, as you can see down here in this chart. Here's where we are right now at this red line, but look how crazy it got above that red line back here in 2013 and 2014. So just because something is overbought and extended does not mean it can't keep running. So it goes back to that quote that you all know: the market can stay irrational longer than we could stay solvent. Meaning, don't bet against something just because it doesn't make sense. Don't jump in front of a moving train. And in the Macro Ops portfolio, we were holding Bitcoin and we actually took profits about 50% ago or so. And why did we take profits? Because I told you, we're focused on risk management. And part of risk management is taking those profits. Risk management is not hodl. It's not just holding and praying and hoping and being all in. Now, we took profits 50% ago, right? And what happened to the thing? It just kept running. And that's the thing about risk management. It's going to make you feel stupid in the short term. Like, oh man, I shouldn't have taken profits. I should have just let it run. But that's the trap. If you listen to that little criticism and you don't manage your risk and you don't take profits, sure, it worked out in this scenario. Bitcoin kept going up. But in most scenarios, you're going to get crushed. And that's the big lesson here too about Bitcoin, is that you can't focus on that one outlier example, such as Bitcoin, another one is Tesla, and say taking profits is a bad idea going forward. It's a mental bias that a lot of us have and a lot of investors have too. So again, taking profits, risk management, it might make you feel stupid in the short term, but it's the right thing in the long term. And that's how you consistently grow your wealth. And that being said, what Bitcoin is down almost 30% today. And I've already seen the tweets. They're flooding in. People are in pain. And this could very well quickly drop to that point where we took profits. I mean, look at how long it took to run up, right? I mean, I'm saying it's still a quick run up, but it's, as they say, an escalator up and an elevator down. Not even an elevator. You're just jumping down the elevator shaft at this point. You're just falling. And when something like this happens, yeah, you're going to be a lot happier that you had that risk management in place. And I'm telling you guys, I'm about to be a broken record about risk management from now on. I got a video coming out tomorrow that's going to explain why and what crazy thing is happening in the market right now. But okay, what is happening to the stock market right now? As of this recording, the NASDAQ is down 1%. S&P is down 0.5%. This is not what we like to see. Stocks only go up, right? So what's happening? Well, let's take a look at the sentiment, one of our favorite ways to analyze the market that we do in every one of these videos. You can see right right here, our Bank of America bull and bear indicator is at 7.1, getting into that extreme bullishness scenario. Last time we saw 7.1 was back in January of 2020. And you can see the more bullish it gets, the bigger the sell signal becomes. Because how does sentiment work? You don't want everyone being way too bullish, because at that point they get overextended, they put all their money plus more into the market. And when I say plus more, I'm talking about they're taking a second mortgage on their house and piling it into Tesla. It's this mentality right here. Don't be afraid of success. I was down to my last $100 in my bank account, and did I use it to buy food? Pay rent? No. I invested it, and now I have $63.47. It is this mentality that you're looking out for. This crazy, crazy speculation euphoria. When you get to that point and sentiment is at that level, that's when you gotta be careful, because the market is going to turn around. So Bank of America has this nice indicator to help us track that. And as of right now, it's 7.1. We're still below levels that trigger that sell signal. So there is still more upside to be had in the next few weeks. And you can get a closer look here on this chart on the right. Right now we're at 7.1, but when we get to that 8 and above, that's that extreme bullishness you want to watch out for. And then of course the opposite occurs as well, where if we have extreme bearishness, that is bullish for the market. Moving on, some more data about the stock market is we've had this rally in stocks combined with a fall in bonds. So if you're tracking US Treasury bonds and comparing them to stocks, you get this indicator right here. And what normally happens when this blue line hits this red line down here, we're usually in for a bout of volatility in the market. That's what happened in the past, right? That doesn't mean it's absolutely going to happen now, but once again, another data point. So we could see some volatility going forward, which kind of fits with what we were saying up here, right? More upside in the next few weeks, but we're getting extended. Another data point is that the S&P's equity risk premium is at cycle lows. And the last time we were here was in September 2018, which preceded a huge market sell-off. Now, equity risk premium, it gets compressed the more that stocks go up. And when stocks finally come down, you'll see this expand again. So in the simplest terms, it's just another indicator of how stretched we are, which is why when we saw them compress this much in September 2018, we saw the sell-off. So that might happen again, but as I talked about in our last video, which we released yesterday, we've had big paradigm shifts in the market because of the Fed. You know, they're leaning with the wind instead of against it. So instead of seeing a big correction here, we might just see this equity risk premium compress even more, meaning stocks keep going up. So all in all, you should be cautiously bullish here. Keep playing the upside, but once again, look at your downside. If your risk point is hit, get out, because we should see a mild correction coming. Now, I also said I had a stock for you, right? That's going to take off in a larger trend, because we're macro guys, right? We look at the big trend, then narrow down into stocks that will benefit off that big trend. So what is the stock that we're talking about here? The stock ticker symbol is BioX, B-I-O-X. And this company is an agricultural tech company. Farming, lots of fun. And the reason we're looking at plays like this is because we're about to enter a big bull market in agriculture. And you can see right here, it has a multi-year base that it's ready to break out from. So this is something you should definitely keep on your watch list. But of course, don't be buying things unless they fit into your strategy. This is not one of those penny stock channels where people are just buying without a second thought. This is look at the idea generation and the research we're doing and then see if it fits. That's the right way to do it. And speaking of the right way to do things, there is something very important that you got to do, especially in this market, to add gains to your upside while still protecting your downside. And it's really important we talk about this, especially in this market, as I said before. So what you need to be doing, so the most important thing that you need to be doing right now is get rid of your bias. Because here's the thing, you know, we're going over all this data, trying to figure out which way the market is moving. And it's great to pretend that we're all super objective and don't have a bias. But in fact, what happens is that you feel a certain way, and it's tough to fight against that regardless of what the data is saying. And in this market that's getting more and more speculative, to the point where a lot of us will be feeling like, hey, it has to come down now. Getting rid of that bias is going to be super, super important so that you can keep capturing that upside. Because the worst thing you can do when we're talking about risk management is just to go full bear and just be like, I'm selling everything, I'm out. That's not risk management. That's just screwing yourself, really. Risk management is getting rid of the bias so you can capture that upside, like I was saying, while still watching out for your downside. So let me show you a couple of examples. And these are a couple of examples of me and my biases, because I guarantee I am way more biased than you are, which is why I have to use a system. Like, I got to go straight to the numbers and make decisions based off that, based off what my system is telling me. And you guys already know how our Fallible system works, right? It's a momentum system. So we have this TSI indicator right here that ranks all the stocks stocks in the NASDAQ based off their momentum. We get a little number right here, and what that's telling us is which stocks have the highest momentum, meaning they have the highest probability of going higher the fastest. So that's our strategy, right? To invest in the top 5 stocks in the NASDAQ, the top 5 highest momentum stocks. So that way we're invested in the stocks that are moving highest the fastest. So we make the most amount of money possible. That's the idea. And it's a quant system fully based off the numbers here. And everything is in place from where we take our profits to where we cut our losses, all calculated out. So my job becomes getting rid of my bias so that I can execute on what the system is saying. I'll give you an example right here. At the beginning of the month, I got an alert to my phone saying to buy mRNA, Moderna. And that's how the system works. It sends alerts to our phone, right? Me and all of our Fallible members using it. And as soon as I got that alert, I was mad because I have lost so much money on this stupid Moderna. And no, that's a lie. I've not lost that much money. But for me, even losing a little bit of money feels like a lot. Again, those are my stupid emotions, right? So already I have a bias against this stock and I don't want to get in. But like I just said, I got to put that aside and execute on the system. That's my job. That's my only job. So I shut myself up. I looked in the mirror. I said, shut up, AK. And then I got in because I'm executing on my strategy. And so far, so good. We're making money on it. But if I let what happened in the past influence me right now, then I wouldn't be making money on this right now. Now, that's not to say that this is going to be a big winner, but it doesn't matter if it's a winner or loser from this point on, because I already won by executing my system. And when it's a good system that has an edge that's proven to work in multiple markets, then you know over the full cycle, when you're taking trade after trade, you're going to end up positive, even if this one specific trade is a loser. That's why our human minds are so focused on the right now, it's tough for us to see into the future, which is, again, my bias is based off what just happened, right? And then I'm applying it to right now without thinking about the future. So I let the system just take it out of my hands and I do what the system says because we built the system, it works. Now I got to take my monkey mind out of it. Another example, the system told me to get into Peloton recently, and I hate Peloton as a company, a product, everything. This is what I felt like investing in Peloton. Pain, like there's a knife in my back that you can't see because it's outside the frame. To me, Peloton is just this bougie thing that rich people buy for no other reason than just hanging up their clothes on it because they're not using it. A bunch of my friends, they all bought Pelotons, especially during this pandemic period, and they're not using it. It's just all about the hype with this stupid bike because that's what it is, a stationary workout bike. And I've already been through this hype with exercise equipment before. Anyone born in the 90s remembers we all had these Nordic tracks in our houses, this stupid cross-country skiing thing that I didn't know how to use then and I don't know how to use now, that my feet, even as a small child, never fit in these little loops. These remind me of those little tiny shoes that they would put Asian women in those specific cultures so their feet don't grow. Foot binding, that's what it was called. Why would I want to do anything close to what this is? And you know what happened with every single one of these things in everybody's bedrooms? People just hung clothes on it, just like they do with the Peloton now. Even the name Peloton, I don't like it. After the backlash with this lady's commercial, now their commercial is just focused on the trainer here. And you got the trainer shouting the whole time, okay, Peloton, you can do it. And that's the thing, even the name Peloton, don't call me a Peloton. And I know what a Peloton is, right? It's like the gaggle of bikes that they all go in, and I know it's a gaggle of geese, but it's the group of bikes for wind resistance or whatever. They're all sniffing each other as they go, yada, yada, yada. I know what it is. But what it feels like is that you got Megatron here, powerful, badass, and then you got Peloton here, his little whipping boy, who can't do anything right, is stumbling all the time, screwing everything up. Just the worst little sidekick tag-along, Peloton. Megatron would be like, Peloton, bring me my rocket launcher. And then Peloton, constantly screwing up, always replying in that annoying voice. Sorry, Megatron, I dropped it on the way over. Wow, 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 wow. Is that what you want to be? A Peloton? Of course not. No one wants to be a Peloton. And this isn't actually any analysis. This is just pure stupid emotion, but it's how I feel. And that's why I'm saying I have way more bias than anybody else. I am a true hater at heart. I don't know why. It's how I was born. That's why I need a system to take me out of all these opinions, these unfactual opinions that I have, purely based off emotion. So I listened to the system, finally put that stuff aside, got in, and sure enough, the things started dropping right away. So that's the second part. Once you listen to the system, then you got to stick to it. Because even when it started dropping, it didn't hit our point where we want to sell. But with how biased I was, you could see right here, oh, it was real tempting to get out of this stupid, stupid company. And if I did that and I listened to my bias, then I would have missed this nice little rebound right here. And now we're up. And that's what I'm talking about. Because Peloton right here has great TSI, great momentum. So I got to say, shut up, AK, you and all your stupid opinions, and listen to what works. Get into the numbers, stick to the quant stuff that doesn't have a bias, that's just focused on profit. profit because you're too much of a hater to listen to what you're saying. So you can see how important it is to remove that bias and stick to that strategy or system. And as always, if you want to learn more about this fallible strategy that I'm talking about so you could use it yourself, so you could get rid of your bias and make profits just like we're doing and all our Fallible members are doing, then check out our free training. I'm going to put a link to it in this video and down below in the description and comments. It'll teach you exactly what we're doing in this strategy with the TSI and everything. That way you can use it yourself. And we crushed the market in 2020 and we're beating the market again. We're only a few days into this year and we're doing great because the system is not only focused on the upside by picking the stocks with the highest momentum, but more importantly, focused on the downside, that risk management. That's what we always do at Fallible. And it's why we're successful long-term in the stock market, not just since the March bottoms like most of these YouTube channels right now. But again, you want to learn more about what we're doing, check out this training. I'm going to put a link to it right here. It goes over everything in detail, so it's absolutely worth checking out. Click this video right here and I will see you there.